In this video today, I'm going to tell you what Forex trading is and how you can get started with Forex trading today. So this video is going to be short and brief. I'm just going to give you the key factors and the key elements that you need to take account of when getting into Forex trading for the very first time. So my name is Gislen and you're watching Forex Hybrid. In this channel, we provide tips and tricks to better your trading. So be sure to subscribe and leave me a comment on what topic next I should cover. So as you can see here, Forex trading for beginners, full guide. So this is going to be brief and short, like I said. So what is Forex trading? Forex, simply, these are research. These are things that you can do yourself. But since you're lazy enough to go do this research, I've done the research for you. So all you have to do is sit back and watch me explain. So what is Forex trading? The foreign exchange market is a global marketplace for exchanging national currencies. So when we say national currencies, what we trade as Forex traders, we trade Forex pairs. So a pair is two currencies paired together to give us one trading pair, meaning that is a pair that you're going to trade in order to make money or, lose money. So either ways, you're going to get the point. So what is a currency pair exactly? You get a currency pair is a price quote of the exchange rate of two different currencies. Okay, traded in Forex market. Okay, they say when an order is placed for a currency pair, the first listed currency or base currency is bought, while the second listed currency in a currency pair or quote currency is sold. So if you have, for example, Euro US dollar, as you see here, this is the Euro against the US dollar. So Euro here is the base currency which you're buying in a scenario where you're buying this trade, you're buying Euro US dollar and you're buying Euro and you're automatically selling the US dollar because it is a pair. And this Euro here is the base currency, and while US dollar is the quote. So if you're buying, you're buying the main currency, you're buying the base and you're selling the quote. If you're selling the base and you're buying the quote. So that's exactly how this thing works. So what you often see on your chart is pairs. Okay, you will never see a pair standing, a currency standing on its own. You're trading it because you're trading the exchange rate between these two pairs. So that's exactly what we're going to be doing as Forex traders. So now what next should you know as a beginner trader who's just getting into Forex now? You should know how to trade, all right? So how do you trade Forex? There are a few steps that I spot on the internet when I was doing my research for you guys. Says there are steps here required to trade Forex. These are the steps you need to follow as a complete beginner in order for you to have an idea of what this is and how you can start going about it. So first off, you have to research and select a broker. So a broker is simply a middleman. It is a middleman between you and the market, meaning you are an individual. You need a broker to create an account with. So you're going to deposit your money in that broker. So whatever activity that you take on your trading platform is going to reflect in that broker, and that broker will be the one to execute your order. So if you place a buy order, that broker will initiate the order. And when you make money, you have your money withdrawn from the broker. So the broker is just the intermediary, is the middleman between you and the market. So you need to do your research on a good broker that will suit your preferences. There are a lot of brokers out there, so choose wisely. Then we go on to our second point here. Open a Forex trading account. So a Forex trading account is simple to open. You just need to follow a few steps. So the first step, which is the one we just covered, you get a broker first. So once you get the broker, open an account with them. So now you have an account with that broker, but you don't have a trading account yet. You have a trading account when you have a trading platform linked to your broker. So a trading platform here, I use Metatrader 5. You can go and search it out, Metatrader 5, and search it out, and do, log in, create an account there. It's very simple. You just download the app and you go and connect your account there as well. So once you link the both accounts together, you're good to go. So now the next step here is to verify your identity. So verifying your identity is like submitting your national ID card or your passport or your proof of residence or whatever the broker is going to ask. Brokers vary and some ask for different information. So on your broker, they are going to ask you for some of your personal information to verify you're a real person and to verify your identity as well. So now we go on to the next, the fourth step here, which is to fund your Forex account. Of course, it is not a trading account if there's no money inside. So you need to have money in your Forex account. If not, you cannot make money. You cannot place trades. You cannot do anything. You need to foil it. It's like having a car without fuel in it. You cannot go anywhere. So having the account, you need to put money in it. Is that money that you would trade? And if you're correct, you double it, triple it, quadruple it, whatever the case may be. So now let's go on to the fifth step here. Research currencies and identify trading opportunities. So now you have to understand that currency pairs different. All right. Not all currencies are the same. Not all currency pairs fluctuate the same. So there's different currency pairs and there's different volatility. There's different volumes being traded on these pairs separately. So you have to do your research, look for a currency pair that suits your need, that suits your suits your preference. Okay. So with that said, you also need to identify a trading opportunity. So a trading opportunity is simply your trading strategy, your trading style, what are the things, the criteria or the rules that you've set that, okay, if I see this particular movement in price, I'm going to take this action. So we're going to get into that in this video. I'm going to show you guys how to spot trading opportunities. Very simple, using my system of trading. So now let's go on to the sixth step here. Size up your first Forex trade. So what does that mean? That simply means when you spot an opportunity, of course, you take your trade. That will be your first trade. Now, it's going to have two outcomes. It's either you win or you lose. So you have to be ready for both. Then I will go on to the seventh position, the seventh step here, which is the last. Monitor and manage your trade. So when they say monitor your trade, it's not that you hold your phone and you're looking at it 247, or no, you don't do that. So when they say monitor your trade, it's like you have levels in the market, you have price levels in the market that you've set alerts at, and you're waiting for price to reach this level for you to take a specific action. So if your market is running in profit at a certain level, you want to take some money off the table. So you want to make sure that at that point you're taking money off the table. That's you actively managing your position. So if you arrive at a point where you feel like you can break even here, that means moving your stop loss to your entry to secure your account and not get stopped out. You can also do that. So all of this is trade management, position management, risk management. You can call it whatever you want. So we've covered all the points now. Let's go back to the fifth point there. And let me show you exactly how to spot good trading opportunities and how to take reliable trades as well. So I have a private mentorship group that I have a few students inside. I give them trading setups and I teach them how to trade Forex. I also have courses that I've pre-prepared for them. So when you join my academy, I give you courses, I give you exercises, I assess you, and we also have Zoom meetings that I analyze your trading, your level of trading, and I see exactly where your weak points are, and we see how to strengthen and fix that. So if you want to, go ahead and check that. The links are down below. You can, message me directly on Telegram, and you can as well join my free Telegram. I have a link there, free Telegram as well. And yeah, so be sure to check them out. Now, this is Euro GPY. This is Euro GBP. I want to show you guys a quick tour of some trades that I took this week. No, was it this week? Yeah, Friday and this week. So I took a trade on Euro USD. I think that was yesterday. And we made some money on Euro USD. Let me just give you guys a quick breakdown and how you should spot trading opportunities. Okay, now we have a trend here. If you look at this market here, guys, you're going to notice that we have two kinds of candles here. We have a bullish candle and we have a bearish candle. So bullish candles are typically these candles that lead the market to go up. And in your case, if you're creating an account for the first time, your bullish candles should be green and your bearish candles should be red. But in my case, I've edited it and I have my own colors that I like. So don't be surprised if yours look different. Okay. So you just have to understand that when the market is going up, the market is bullish. When it's coming down, it's bearish. Bearish means it's selling and bullish means it's buying. There's more buyers than there's sellers. And when it's selling, there's more sellers than there's buyers. So now, as you can see here, overall, price was here at this point here. You can read the price on this scale right here. Over here, you can read the price there. So price was up here at 1.12739. And now price is at 1.0977. The price has dropped drastically, leaving us in a bearish trend, meaning in a market where there's more sellers than there's buyers. So with that information, what do we do with that? This is a trend. This is called a trend. So what is the current trend of this market? This market is bearish, it's sloping downwards. So now that we know that, what do we go ahead and do? we look for market structure. So market structure simply refers to, the movement of price, like highs and lows. So in a bearish market, you're going to see highs, higher highs, you're going to see, lower highs and lower lows. So we have a lower high here, we have a lower low, a lower high, a lower low, a lower high, lower low, lower high, lower low. Everything just goes lower and lower and lower and lower until that trend exhausts itself. So as you can see, that's typically what this market was doing. The market was having a high here, a low, a lower high, a lower low, a lower high, a lower low, a lower high, lower low, and so on and so forth. And it keeps going. So now with this information, you know that what, okay, this market is bearish, and we've confirmed that this market is bearish. So we want to look for areas where price has rejected at least twice. So when we see that bounce there, one, then it comes back again there the second time, that is a level where we want to get involved if price comes back again. So simple, we have a nice area here that was created, but now this area was not confirmed until price got back here and retested it 2 times. So like I said, price formed a low here. I don't really care about this low, but when price broke it, it came back here and rejected this area, came back again, rejected it with a wick. So when I see these rejections here, confirming here that, okay, we have one touch, and we have the second touch, and the third touch, I wanted to get involved on the fourth touch. So it's pretty simple. Now that we have this price level drawn out, I use my tool, the box tool. You can come over here and look out for it. It's called the rectangular tool. This is Tradingview as well. All right. This platform that I'm trading on is called Tradingview. Search it up, create your account. It's free of charge. You can use it to analyze your trade. So here on this platform, you're going to have access to a lot of tools, like all of these tools you see here. They really help out. So I think as a beginner, you should stick to the rectangle tool here and maybe the whatever this short position and long position tools. That's all you need. And maybe Fibonacci. So you use the box tool now to align and measure to, highlight the area of price where you want to get involved in, which is what I did here, as you can see. So this ACP here stands for area of condensed pricing. It is a strategy that I have done my research and I created this strategy from scratch. And this strategy have been working for me ever since I started trading. And this is what I'm implementing and teaching my students. And it's been giving us insane results. So be sure to check my free Telegram. I post results there every single day. So if you doubt me, check it out and watch some of my videos as well. Thank you. With that said, as you can see here, it's pretty simple and basic. We have a tap here in price, price from a low. Now we sit back on our hands and do nothing until we see another tap, which is this one. Then okay, we have one, two taps. Our rules have been met. So now we can go on the third tap here to enter a trade. So you can get a sell trade here all the way to the downside. Or however, if you missed this one, looking at it with these weak rejections and everything, that shows that there's more opposing pressure in this market, which is giving us another opportunity to still sell this market. However, so that's exactly what I did. I took this trade and I shared it in my free Telegram group. I'm just going to show you guys a screenshot of my Telegram. So this is my Telegram right here. The public group, I think. So this is the trade that I took. This is it, Euro USD. You can see Euro USD here. This is the trade. Let me show you guys the setup. The setup was shared as well. This is the trade that I took. I want to show you guys the setup that I saw. Okay, this is it. So this is Euro USD before, as you can see here. I uploaded this on the 4th of August, 2023. And this is the trade that I predicted. So now, where is that market now? The market has dropped. So this is it. That was the before, and this is the after. So now, how did I spot these levels? I told you guys, let your key level have at least twice. Let it be tapped at least twice. So it has been tapped here once on the upside. When the market broke, came back in the downside, it taps it again a second time to confirm. Then the third time, we take action. Or the fourth time, we still take action. So that's what I did, and that's how I got that trade. So we went on to another trade. I think I took a trade again on Euro NZD, if I'm not mistaken. Okay, yes, I took a trade here on Euro NZD, and I think I've deleted that but however, I'll go to the group and still show you guys the screenshot if you do not trust. So this is what I saw here. I see a good ACP area here. Once again, ACP stands for area of condensed pricing. So I spotted this area here, pretty cool. And I anticipated for a trade, which was this one. So I got in on this move and I bought this market all the way up. And it left me with some profit. However, partials of some of my positions were stopped at a break even, but still I took some money off the table. So as you can see here, this is exactly what I was showing you guys in that channel. This is it. This is the top, and this is the before. This is the before here. Before price came and bounced on it. Then this was the after when price bounced on it already. So I took this trade, of course, and I made some money. I made a quick buck off the market. And all of these things, guys, as you can see here, this is the trade. Euro NZD. You can look at this Euro NZD here. I made a few dollars from here, 38, 38. I don't know how much that is. That's like, I mean, it's still something. You know, at the time, my computer, I was having an issue, so I was not really into the market. I just saw that level and decided to still take the trade though. But now I'm fully set up and I'm recording on my new computer. So now, guys, this is how you do it. All right, you come on the price here. You look for areas that price is rejecting. If price bounces here, bounces on a vertical surface, it bounces there multiple times. You should highlight that area. It should be clean, okay? You should not have candles passing it or candles. No, it should be clean. Look at this. It's clean. So when price got back, I bought this market and went up. Okay, that's what you want to look for. You want to look for lows like this that have one, two. You highlight them and you wait for what? You wait for the third one. So the third one should be coming down here. You buy this thing up. And if it comes and passes it and breaks it to the downside, you do what? You wait for the market to come back here up and then you sell it. So if you want to know detailedly how I do these things and how I catch insane trades like this, be sure to watch more of my videos. You can go down, scroll all the way down. I have a bunch of videos that will be of help to you. And be sure to join my free Telegram as I post updates and setups there as well that would help you. And if you need advice or you want to join my mentorship, it's very, very easy. And at the moment now, it's going for $175. So you really check it out. And we're going to come to the end of our session. I hope this video was helpful to you. So an this is just a trading it's just a trading tip. Let me just say it like that, so you can take this information, go out there and do your research before you get into forex trading if you're new, and if you're already an intermediate trader. Thanks for watching anyways. Consider subscribing. Once again, my name is Ghislaine and you're watching Forex Hybrid.